Yes, Bismillahirrahmanirrahim. Hello and Assalamu alaikum to everyone. Welcome to MA Practice to Pass webinar, which is being organized by ACCA Pakistan for June 2021 exams. Today is day 5 and it is the final day of this webinar series, and today is 21st May. Uh, I am your tutor Haris Sanif, and this is my WhatsApp number. Before going to start with this webinar, I would like to make sure whether my voice and screen is all clear. Am I audible to everyone? And also confirm me whether the screen and voice is all clear to you people. All of you do reply me in the question box. My voice and screen is all clear. Okay, that's good to have a response from you people. And today is day 5, but and today's agenda is about the other areas, and I would be teaching some other areas which I have selected for you people, and this would be very interactive, and it will be very beneficial, inshallah. But we have to resume from the topic where we had ended yesterday. In yesterday, therefore, there was an OTQ, a case-based OTQ was remaining, and this OTQ I gave you as an assignment, and the topic was of performance measurement. If you people remember, the topic was of performance measurement in the last class, which was on day 4, and I gave you this question as an assignment. So today's webinar is going to resume from the case-based OTQ of performance measurement area. It is saying that, first of all, we should look at the entire question. Words 2 marks, words 2 marks, 2 marks, 6, 7, 8, 9, 10, which totals 10 marks. This is the case-based OTQ. And let's now read and solve this question. I am solving this question with a assumption that you had tried this question as part of the assignment which I gave you in the last class. So this is question number 1. GoGo Limited is a manufacturing company and various management trainees had been inducted, and you are the senior management accountant. You are a senior management accountant responsible for the training to the juniors. You are responsible for the training to juniors. Part 1. One of the concerned tasks is to train about the mission of the organization. Now see, what do you mean by the term mission? What do you mean by the term mission? What is mission exactly? The mission is basically the mission is basically the reason of existence. Mission is basically the reason of your existence, that why the organization actually exists. That is not the aim to make money. Making money is one of the objective of the organization, but this is not the reason of existence. Making money and increasing the profitability is the main agenda of every organization, but mission is something else. For example, if I talk about a college, then why do college exist? Why do college exist? The answer is to provide education. To provide what? Education. This is the main aim of the college. For example, if I talk about the famous company Google, why do Google exist? Obviously, Google is one of the Google is the topmost organization in the social media channel, earning the profits, the very high profits. But what is the main mission of the Google? That is to provide information through search engine. Information search engine. That is the aim of the, that is the mission of the Google. Okay. And if I talk about the hospital, why do hospital exist? Hospital exists to serve the patients. Okay. So that is the mission, that the reason of the organization. Which of the following will be included in the mission statement? Now, what do you mean by the term mission statement? The mission statement is a published statement. It is a published statement either on your website, either in the financial statement, in the annual report, which includes various things. Which includes what? See over here. Select all that apply. Select all that apply. Mission includes purpose of the company existence, yes. The strategy, yes. Detailed guidance on budget, no, because budget is an operating activity. Policies and behavior, yes. Detailed introduction of the member of the board, no, not at all. And values and cultures. These are the things, these are the things which are included in the mission statement, which is basically published to the stakeholders. And basically the aim of publishing the mission statement is that to make people aware about what organization is dealing in, and what are the policies and behaviors and the guidance and the values and culture of the organization, and why do organization exist, what are the strategies, what are the policies and behavior, what's the values and culture of the organization. These are the main contents of the mission statement, and it is a published statement which is publicly available. When something is published, that means it's for the public. Okay, so let's move on to the next MCQ, in this case based ODQ. Okay, we have to read the requirement first. Which department is making best use of employees' time when compared to the budget? Best use of the employees' time. Best use of the employees' time. Which department is making the best use of the employees' time? Best use of the employees' time when compared to the budget. Okay, so this is budgeted operations. This is actual operations. This is budgeted employees, and this is actual employees. Employees time, employees time, employees time. Okay, just read this question. Read this question and just see the figures and analyze the data. This is called the data analysis as well. Can you people analyze this data and give me your answer, which department is performing well? Can you just analyze this data, students? Okay, now basically the question is actually asking uh, yes, uh, yes, Fiona Trish, this is the first slide, and we had covered this was a question which we had which I have given as part of the assignment, the performance measurement OTQ. I have covered just one MCQ. Now I am moving for the next MCQ. Okay, now see the figure. This is the budgeted operations, and this is budgeted employees. Best use of employees time. Best use of employees time. We can say in department A, in department B, in department C, and in department D. Best use of employees time. See, I'm using red color for the budgets. This is the budget. The budget was 800 operations from 4 employees. That means what was the budget? The budget was 800 divided by 4. That means 200. That means 200. What is this figure? I am dividing budget operations with the employees. That is the use of the employees. So when something is in use, in the denominator you will be placing employees, because employees will be used, and the output is on the numerator. That is the operations. That is operations per staff. That is 200. And if I talk about the next thing, that means 700 divided by 5. That means 700 divided by 5, and that's 140. We are basically calculating operations per employee. These are operations per employee. Operations per staff, that is the best use, the terminology will be called as. And next, 1200 divided by 8. 1200 divided by 8, that is 150. And 300 divided by 4, that is 75. That was the budget. And what was the actual thing? What was the actual thing? What was the actual thing? In act, this is basically the operations per staff, operations per employee. I need to compare with the actual, and right now I am using the actual. Now see, this is actual. In actual, 1000 divided by 5. 1000 divided by 5, that was 200. Yes, it's same, not well, not good. Number 2, 660 divided by 3. 660 divided by 3, that's 220. Then 1050 divided by 7. 1050 divided by 7, that's 150. And then 400 divided by 5, that's 80. See that this is same, and this is only with 5 plus. But this is the very with a good margin, that budget was 140 and actual was 220. So that means department B is performing very well. Department B is performing very well in terms of utilization of the staff time and the skills. You have to compare budget with the actual. And what is the KPI? The KPI is use of staff. That is operations per staff. That is operations per staff. Okay. So department D is performing very well. Now, as we had discussed the ratio analysis in the yesterday class, today is one of the interesting MCQ as well. I just want you people to read this MCQ. What will be the impact on the current ratio and asset test ratio? What would be the effect? Just do one thing, just read this question. Then I will explain the way and the trick to solve such kind of questions. Just read this question. Okay. From the financial results of the company, it was reported that company has current assets of 1.8 million, including inventory of 0.5, including. That means current status, that means currently we have current assets of 1.8 and current liability of 1. Current liability of $1. Okay, currently. The question is saying what will be the effect. The question is saying what would be the effect on the value of current and asset test ratio if if company bought more material on the 3 months credit. This is something asking for the effect. Now, if there is something of the effect, the simple thing is that you need to calculate the current status. That is current ratio, that is following these figures. Current ratio is 1.8 over 1, that is 1.8. And quick ratio, I mean acid test ratio. Acid test ratio is also called as quick ratio. Quick ratio was 1.8 minus 0.5 divided by 1. 1.8 minus 0.5 divided by 1, that is 1.3. Okay, this is my current status. What the company is saying that if the company will bought more raw materials, imagine if you will buy more raw materials, what would be the double entry? The double entry would be that material debit and liability credit. I mean, current liability will be credited. Okay, material debit and current liability would be credited. Now, material is asset and current liability, obviously, it's a current liability. Now, just imagine the amount. For example, this is $0.9. Let's say I am assuming a random figure that is 0.9. That what would be the effect? What would be the effect? Now, my current assets would be 1.8 plus 0.9. This would be my new bought materials. It would be 1.8 plus 0.9, that becomes 2.7. And obviously my current liability would be 1 plus 0.9. It would be additional, that is 1.9. Now my current asset would become, this is my new figures. Okay, so what would be the effect if I will be calculating current ratio? That is 2.7 divided by 1.9. 2.7 divided by 1.9, that is 1.42. And see that my current asset is decreasing. My current ratio is decreasing. So that means this option is eliminated and this option is eliminated. Okay, my current ratio is decreasing. Now let's focus on the quick ratio. Quick ratio, your current asset is 2.7 minus inventory is 0.5 minus inventory, it is 0.5 divided by 1.9 and it is 1.15. See, this is also decreasing. This is also decreasing. Okay, so that means decrease and decrease. Option D, decrease and decrease. That is option D. This is my answer. Whenever you are dealing with such kind of question in which you are being asked to give the impact and the effect, just assume the random figures and try to figure it out that what is the current scenario and what would be the next case. So in this very simple manner you will be able to calculate and give the theoretical part of the answer. Okay, so both are decreasing, both are decreasing, both are decreasing. Now, moving to the next part D, 1111, these are the four theoretical aspects. The following statements had been made. You are required to make statements as correct or wrong. Just try. Try by yourself now. Hurry up. 1, 2, 3, 4. These are four statements. You need to read and you need to tick or cross as per your current level of knowledge to date. Then I will be explaining each and every statement. Hurry up, students. Okay, now students, I'm now going to explain each and every statement. You probably have marked right or wrong, whatever is this, and I am impressed that students have responded me in the answer. So now, number one, performance of the manager should be judged in isolation. It's cross. It's wrong. Now, what do you exactly mean by the term isolation? Isolation means no comparison. Isolation means no comparison, but the performance must be compared. Performance must be compared. And imagine that you are not even comparing the performance. So how will you judge the performance? You cannot judge the performance. You cannot judge the performance. See what I am writing few things. I will be writing in the at the bottom of this page. Just wait 2 minutes. Number two, managers should not be held responsible for the increase in the cost due to inflation in the country. Yes, it's will it's inflation. It's an inflation. It's an uncontrollable factor. I am writing few things for the performance assessment rules. Performance assessment rules. It must be compared and comparison with the past, comparison with the no, not with the future, comparison with the past, with the competitor, comparison with the budget, and that budget should be flex budget. So these are the comparisons. The next one is that assessment should be based on controllable factors. And it's saying that it's not because inflation is an uncontrollable factor. It's an uncontrollable. Number next, only financial KPI should be used to assess the performance. The answer is absolutely no. Why? Because we should use multiple KPIs. That is financial plus non-financial. That is financial and the non-financial both. Number four, ideal target should be given to the managers at the start of the budget period? The answer is no. The target should not be ideal. Should not. We mean to say that target should be attainable. Practically attainable, not ideal. Okay. So do write these statements as well, which I am writing here. And one more statement I need to write here. So one more statement is that performance measurement should be fair. Should be fair assessment. That is, fair means one should not be blamed. One should not be blamed because of others. For example, if I'm not producing the goods, then you have to figure it out why actually I'm not producing the goods, because the purchasing manager had not arranged the raw material. So it's not my fault, it's his fault. So I should not be blamed because of the poor working behavior of a purchasing manager. So this was the performance measurement. This was the performance measurement which we had done, and the performance measurement section was already covered in the last class, which was day 4. And this was the assignment OTQ, and I have explained it. Before going to proceed, excuse me, students, just come on to the question box. Just come on to the question box and give me your response regarding this performance measurement area so that I can proceed with the today's agenda. Had you people understand that? Regarding the performance measurement rules, this especially this OTQ objective test question, which was a very good question, I guess, for 10 marks. It's all clear. Okay, that's fine. That's good. And I appreciate that all of you are giving me the response. All right. So now, students, this was the performance measurement topic which we had covered. Now I have to. Now, what is basically the today's agenda? In my day-wise plan, I had told that in day 5 we will be covering other areas. We will be covering other areas. Now, what are the other areas? Probably it quite may be possible that you will be happy that other areas are the mixed areas. These are the mixed areas. And mixed areas, that means this is the specimen paper. This is the specimen paper that is only MCQs. Only MCQs. See that all 35 questions are compulsory and must be attempted. Now it quite may be possible. What I have thought, I'm just sharing first of all my mentality that what I am going to cover it here in day 5. In day 5, I am intending that we should cover multiple choice question, that is MCQs, that is mixed MCQs, so that through the mixed MCQs, various topics can be covered. Various topics can be covered. And this was the surprise. That's why I had not disclosed in the day-wise plan, because through these MCQs, mixed MCQs, various topics can be covered, like process costing, like sampling, like pie chart. And believe me, today's this agenda of the mixed bank of the mixed MCQ will be very important and will be very productive as well. And today I'm going to show you people the ACCA global website and the resources which are available over there, so that you should use those resources as well. Okay, so how's this idea of the mixed MCQs? Various topics can be covered. How's this idea? It's not the specific topic today, it's a mixture of topics, so that various aspects can be covered through these MCQs. And I will also be explaining, and as you know. So I guess I need to open few rough pages as well. so that if I need to write something, I will be writing over here. Okay, let's now, student, let's start. This was of the previous specimen paper, and in the current specimen paper of 2021, there's the same MCQs, but few MCQs are different, which I had copied here. These three MCQs are new in 2021 exams specimen paper, in which there is a coefficient of variance, probability analysis as well. So we will also be covering. These three MCQs are new, and rest of the MCQs are same as of the previous specimen paper. Okay, so just focus on one by one. Each and everything will be clear to you, inshallah. And first of all, this is my question number one. This is my question number one. And believe me, this will be a very productive session. Going to be, it's going to start. A company manufacturing company benchmarks the performance of its accounts receivable department. Now, first of all, you should know what exactly benchmark is. See that I'm going to explain this benchmarking, and then later on I will be solving this MCQ. So through these MCQs, which are specifically designed by your examiner, the specimen paper, you will be able to cover many topics. Now, various topics you can cover from here. What exactly benchmarking is? Benchmark is basically the target like your best practice, in the market. For example, let's say, for example, there is XYZ. XYZ, it's a 5-star hotel. It's a 5-star hotel. Let's say, for example, and you are a person, you are also in a plan to introduce to enter in the 5-star hotel business, and you made this hotel as a benchmark, as a target, that my performance should be like XYZ 5-star hotel. So what are you trying to do? You are making the target. You are making a target. Which target? Which you assume as a best practice in the market, and through continuous comparison the performance can be improved. This is making, and this process is known as the benchmarking. Now, what is this benchmarking? Accounts receivable department with that of a leading credit card company. What is this? This is the functional benchmarking. This is what? A functional benchmarking. How functional benchmarking? I'm going to explain it here. See, there is a benchmarking. And don't worry, I will be sharing this slide in that WhatsApp group which I had created. Benchmarking, making targets to improve performance. Okay. Now, there is internal benchmarking, and internal benchmarking means within the organization, that is from one department to another. This is internal benchmarking. Next is the competitive benchmarking. Now, what do you mean by the term competitive benchmarking? Competitive benchmarking involves our product versus competitor product. That is the product. But what is the functional benchmarking? Functional benchmarking means Functional benchmarking means that is department versus department of another organization. That is, the function is same. Function is same, but organization is different. So this is a functional benchmarking, okay? And what is the strategic benchmarking? Strategic benchmarking involves strategic actions versus strategic actions. It's a strategic actions, and this is the departmental thing. So that is why it's a functional benchmarking, okay? That's why it is a functional benchmarking. Now, I have explained, or whatever I can do related to this topical revision. Benchmark, this is a functional benchmarking, okay? Number two, which of the following best describes the target costing? Which of the following best describe the target costing? Let's first have a recap of target costing. Come on, make this session interactive. Come on to the question box, everybody. Come on to the question on the question box, everybody. Just give me the answer. For example, you are entering into the organization. You are entering into the organization to launch a particular product, and that product is already being traded in the market by many of the suppliers. Can you charge your selling prices according to your desire, or the competitive prices would be used? For example, see that what I'm trying to do, target costing example, just assume that we are launching product A, and the selling price of that product is $70 per unit. The product is already traded in market by, let's say, 20 suppliers. Can you charge more than 70 selling price? Just say yes or no in the question box. Can you charge more than $70? Just say yes or no. Come on, students. No, you cannot charge more than 70, because you have already a set price in the market, and that means this is a competitive selling price. This is a competitive selling price. So what will be our strategy? That is, we will also charge $70, and I want target profit. Let's say my target profit is $10, and that means $60 is my target cost. So if we want this profit, then my cost should be $60. Then my cost should be $60. Now I have to make the efforts. Now what will be the next task? The next task will be to making efforts of cost reduction and bringing cost down to $60 to earn target profit of $10. Okay, so this is the brief recap of the target costing. What are you actually doing? You are actually taking the selling price from the market. And you are deducting your desired profit margin in order to achieve it at the target cost. So just give me the answer. Which of the following best describes the target costing? Setting a selling price, setting a price cross because we don't set selling price. We take it from market. Now see, there is nothing to do with the variances. Option A is correct. Setting a cost by subtracting a desired profit margin, that is your target profit, from a competitive market price. So A is the correct option. A is the correct option. That is the target costing. Now, this is MCQ number 3. This was MCQ number 2. This is MCQ number 3, and it's of process costing. MCQ number 3, it is of process costing. See, if I will be doing something a long working, I will be using these rough sheets, and this will also be attached. And the final, all the day wise sheets will be shared in the WhatsApp group as well. Don't you people worry about it. And if I will be solving anything along examples, so I will be using this blank slide. And this is a formal document. Information relating to two process F and G are as follows. For each process, what are an abnormal loss or abnormal gain? See, in process costing, see, in process costing, what's in process costing? In process costing, there is a series of process that is more than one processes, and here often loss in the production process, and the loss may be normal loss. Normal loss is something which is expected. And what is abnormal loss? Loss greater than the normal loss. That's greater than your expectation. And this is known as the normal loss. In one, there's one thing more as well here in the process costing, that there is an abnormal gain. There is an abnormal gain. Now, what is abnormal gain? For example, expected loss is, let's say, 20 kilograms. For example, 20 kilograms. And making a scenario, if actual loss is 22, then 2 kilogram is abnormal loss. Then 2 kilogram is abnormal, because normal loss we had expected 20 kilograms. And if actual loss is 17 kilogram, see, I was expecting 20 kilogram, but the actual loss is less. So that means that 3 kilogram is abnormal gain. It's abnormal gain. What is abnormal gain? Abnormal gain, if actual loss is less than normal loss in the production process, because the series of process, it's a series of process. No problem at all, Mr. Suleiman. You are not added in the WhatsApp group. The WhatsApp link will be shared in this question box as well, or you can simply WhatsApp me as well. The WhatsApp link will be shared in this group, and I will also giving you my number as well. Just wait for the WhatsApp. Okay, students. So this is the process costing, and I have taught this thing. If you want to note, you can. I'm giving you 1 minute to copy this. Normal loss, abnormal loss, and the abnormal gain. Okay, students, let's now move on to the to that question. See that this is an input liters and this is output liters. Process F and G. I'm now going to solve it here. Process F and process G. There is an input in process F that was 65,000, and the normal loss is 8% of input. NL normal loss. NL normal loss, it is 8%. So what is the normal loss here? 65,000 multiplied by 8%, that is giving me 5,200. That means your expected output is 59800. This is expected. And what is actual output? This was my expected output. And what was the actual output? The actual output was 58,900. That is, actual output is less. See, my actual output is less. Actual output is less. So that means here we are having abnormal loss. 59,800. That is 900 abnormal loss. Okay. So here abnormal gain option is eliminated and this is also eliminated. F and G. In G, there is a 5% loss. What is the input? The input is 37,500. Normal loss is 5%. That is 1875. And the answer is 36. Sorry. The answer is 35625. That is my expected output. And what was the actual? 35,700. The actual output is 35,700. See, it is the actual output is more. The actual output is more, okay? So 35,700, that means 75 abnormal gain. So here it is abnormal. C is the answer. Abnormal loss and the abnormal gain. This is a process costing calculation, and we are having the correct option as option C. If I am silent after a particular solution, that means this is a time for you people to copy or taking the screenshot, whatever is convenient to you. But one thing I will advise, that if you are taking the screenshots, so later on do copy in your notebook or your register as well. Okay, students. Now the next question is about the marginal costing and the absorption costing. Before going to start the marginal and the absorption costing MCQ, I would like to give a very short recap of absorption costing. And see, today's main agenda is the topical recap, but main focus to solve the MCQs, because it will worth 35 MCQs. It worth 70 marks of your paper, 70 marks. And in the previous webinars days, I had covered MCQs as well as OTQs. So you can say that you are having more than 60 to 70% of assurance to pass your exam as far as this time period is concerned. Okay, students, this is absorption costing, and here it is marginal costing. Now, what's the main theme of the marginal costing is that stock is valued at variable cost, and they charge fixed cost as a period cost. As a period cost, that is full deduct. And what's the absorption costing? In absorption costing, you value your stock at direct material, direct labor, plus variable overheads, plus fixed overheads. Here, fixed cost is the part of the value. Is a part of the value. Okay. So in absorption costing, what is the criteria? That sales, you will less COGS, that's full cost, and you will be having the figure which is called gross profit. Then you will be deducting other non-production cost, and you are having a profit of it. And what is the criteria of marginal costing? You are taking sales and you are deducting all variable cost, and the resulting figure is the contribution. And afterwards, you will be deducting fixed cost. See, there's a fixed cost, full fixed cost as a periodic fixed cost. You will be having a profit figure. You will be having a profit figure. This is the absorption and the marginal costing format of the income statement. Now, as part of the MCQ learning, is that um, I'm here writing a MCQ trick as well. The MCQ trick as well. The following budgeted information relates to a manufacturing company for the next period. Production is 14,000, sale is 12,000. The normal activity is 14,000 per period. This is fixed production cost and this is fixed selling cost. See that it's a fixed production, fixed selling, but it should be fixed. But it is fixed. It should be fixed. And the next thing is that using absorption costing, the profit for the next period has been calculated as 36,000. As 36,000. 36,000 is the profit under absorption costing. Now, what would be the profit for the next period using marginal costing? Using marginal costing, okay? Using marginal costing, you are required to calculate. You are required to calculate the marginal costing. Can you people tell me what is the closing stock here? Excuse me, students. Can you people tell me what is the closing stock here? And what is the opening stock? No, 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 no. What you don't know? What you don't know? Um, Mr. Azhar, what you don't know? Okay, okay. Now I am explaining. See that the main difference between absorption and marginal, the main difference between absorption and marginal is main difference is because of change in stock and fixed production overheads. Fixed production overheads. How? Just remember the just remember the simple way and the format to calculate this thing. You will be simply in a position to calculate this answer. Forget the selling cost. We are concerned with the production cost. The production cost is 63,000 and it is based on normal activity of 14,000. So we can say that fixed overhead absorption rate, but it should be related to production. That is 63,000 divided by 14,000. 63 divided by 14 will give you dollar 4.5 per unit. 4.5 per unit. Okay. What is a simple way? Just focus here. Use fixed overhead absorption rate is equal to marginal minus absorption. I am writing a format here, divided by opening stock minus closing stock. See, there is no opening stock. There is no opening stock here. So opening stock would be zero. Opening stock would be zero. And if you 14,000 produced and sell 12,000, so that means 2,000 is in the closing stock. Okay. Now just place up the figures. That is 4.5 is equal to marginal costing profit is X unknown and 36,000 is an absorption profit divided by opening stock 0 minus closing stock 2,000. Now just make it simplify. This will be go over there and this will be go over there. So your X and the calculated answer using the basic mathematical trick would be $27,000, which is B. Just calculate through the reversal. Is it B? Just try and verify this answer. Is it B? Yes, it's B. Okay, students. So remember this trick. Remember this trick of uh, absorption and marginal profit differences. Just give me the confirmation whether your calculated answer is also $27,000. It's $27,000. Where is the issue in this calculation? Mr. Azhar Ahmed, just type it fast. Where is the issue? Okay, I'm solving here. See, I'm solving this answer for you. This is MCQ number 4. This is a simple format. Fixed overhead absorption rate per unit is equal to marginal profit minus absorption profit divided by opening stock minus closing stock. Fixed overhead absorption rate was $4.5. This is the thing. Marginal profit is X, unknown to me, and absorption profit is given. Absorption profit is given 36,000. Opening stock is 0 and your closing stock is 2,000, because 14,000 you had produced and sold 12,000, remaining is that 2,000. So simply 4.5 is equal to X minus 36,000 divided by minus 2,000. And using the basic mathematical trick, 4.5 multiplied by minus 2,000 is equal to X minus 36,000. So 4.5 multiplied by minus 2,000 would result is minus 9,000 is equal to X minus 36,000. And if you will further simplify by shifting the figures towards the opposite side of the is equal to, then minus 9,000, here it will be plus 36,000 and X is your marginal profit. Option B. Yeah, now you got it. Okay, no problem at all. This was MCQ number 4. Okay, now we are heading towards the next MCQ, which is MCQ number 5. We had covered MCQ number 4. This is number 5. Just solve it. Solve it. Hurry up. Give me the option. Give me the answer. The Eastland Postal Service is a government owned. The government requires it to provide a parcel delivery service to every home and its business in Eastland at a low price, which is set by the government. Express Courier Company is a privately owned parcel delivery company that also operates in Eastland. It is not subject to the government regulation, and its deliveries are a large business located in Eastland capital city. You have been asked to assess. You have been asked to assess. This is the MCQ of the assessment. You have been asked to assess the relative efficiency of management of the two organizations. Which of the following factors should not be allowed when comparing ROCE between the two organizations? ROCE. Now, ROCE involves profit before interest and tax divided by capital, isn't it? It is profit before interest and tax divided by capital. And yes, while comparing these things, we will be charging this, we will be considering objectives, we will be considering geographical areas, but what about the workforce motivation? See, this will not be considered because motivation is something not included in ROCE. ROCE is a calculated answer. ROCE is the calculated, or I must say it's a quantitative answer. It is a quantitative answer, and workforce is a non-quantifiable. We cannot include this in a, and it's nothing to do with ROCE motivation. Okay. Now move on to the next MCQ, that is MCQ number 6. Under which sampling method does every member of the target population has an equal chance of being in a sample? Now, I should give you a brief introduction about sampling because it is specifically the topic as well, sampling. So we must have to discuss it. Sampling. What is basically a sample? What is basically a sample? For example, there are total. For example, there are total 1,000 units. These are 1,000 units. The total units will be called as the population. And to population, that means 100%. And what do you mean by the term sample? Sample means less than 100%. For example, you are going for your blood test, okay, and you will not be giving your 100% blood for the testing. You will be giving the sample, and on the basis of the sample, testing would be conducted. On the basis of sample, comma, testing are conducted. And there is a methods of sample. Methods of sample. For example, there are methods of sample. For example, one of the method is the random sampling. Random sampling. What the random sampling includes? It basically includes, random sampling includes that you should consider 100% population and then select, let's say for example my sample is let's say 350 transaction. For example, this is my sample, and select any 350. So that means every unit has equal chance, because I wrote select any 350 and you should consider the entire 100% population. So that means every unit has equal chance of being selected. So that is known as the random sampling. Now see here, in a target population has an equal chance of being selected, this is a random sampling. This is a random sampling. Yes. And what is the stratified sampling? I am explaining it verbally. Stratified sampling means that you are taking the categories. You are taking the categories. For example, that you are taking the sale transaction and you are splitting into two, cash sales and the credit sales. So that is the categories of the sampling, stratified sampling. Systematic sampling is that you follow a simple pattern. You follow a simple pattern. You are following a simple pattern. And cluster sampling is basically the sampling which is the representative of the entire population. Okay, so don't be confused about it. It's an equal chance of being selected. It's a simple random sampling, okay? Number seven. Number seven is yet another interesting and challenging. It's not a challenging question. It's related to the budget. What is the budgeted raw materials purchases for the next period? What is the budgeted raw material purchases for the next period? Budgeted raw material purchases for the next period. As you people remember that we had covered the budgeting, and I have covered the maximum portion of the budgeting. Material purchase, that is purchasing depends on the production budget. Purchasing depends on the production budget, and we do not have the production budget up till now. So we need to make a production budget first. And I do not need to explain because it was the first session of it was the first class when we had studied the production budget. The budgeting was the agenda of the first class. So what is the sale demand? The sale is 19,000 units. Opening inventory 4,000, closing 3,000, and opening is 4,000. So what is the production budget? The production budget is 19 plus 3 minus 4. That is 18,000 units. 18,000 units. And in order to make 1 unit, it needs 8 kilogram of raw material. So that means production is 18,000 units. And to make 1 unit, it needs 8 kilograms. So that is the usage. 18,000 multiplied by 8. That is 144,000 kilograms. That is the usage budget. Now we are finally making the purchase budget. We are finally making the purchase budget. Obviously, I will be purchasing according to my need of use. That is the usage of 144,000 kilograms. We have to adjust opening and the closing inventory. Closing inventory of raw materials was 53,000 and opening kilogram was 50,000. So that will be the purchasing budget. 144 plus 53 minus 50. That means 147,000 kilograms will now be purchased. And we had discussed it in detail in our day one budgeting, and that's 147,000, option B. Okay, now we are moving towards the next question, and this is the graph. Question number 8. Up to a given level of activity in each period, the purchase price per unit of a raw material is constant. After that point, lower price is applied to further units purchased and also retrospectively. What do you mean by the term retrospectively? retrospectively means? Retrospectively means right from the start. That means from start till end, all units. And now here the discount will be given retrospectively. That means, for example, if the discount will be applied after, for example, if the discount will be applied after 40 units, for example, if the discount will be applied after 40 units, that means that discount will be applied retrospectively. What does it mean retrospectively? It will be applied, for example, I'm just displaying I am just displaying a common simple way to draw the graph. For example, from 1 till 40 units, the purchase price is $3 per kg, $3 per unit, and the discount is after 40 units retrospectively. Now, what do you mean by the term retrospectively? The discount will not be applied after 40 units. The discount will be applied as if it is being applied on the entire units right from start till end. Let's say, for example, you purchased 50 units, for example, and the discount is of $1, for example. So entire 50 units will be charged at $3, and that will be your 150, your total amount. Not $3, sorry, $2, because this is $3 and the discount is of $1. So it will be for $2 and it will be $100. Okay. So your cost is reducing. And remember one thing, while drawing the graph, if my cost is high, for example, this is unit. Okay, I'll show you in the next slide of the graph that how to draw the graph. See, this is a very simple trick. I'm now going to explain it in the graphical manner. This is 1 unit, this is 2 unit, this is $1, this is $2, and this is $3. For example, if I purchase 2 units at $3, my graph will be look like this. The slope of the line is above. It is the slope like that. Now, what if my cost is $2? I am using the same graph. That is 1 and that is 2. That is $1, that is $2, and that is $3. If I will be purchasing 2 units at $2, so my graph will look like this. See, when your cost is reducing, that means cost line of y-axis is falling down towards x-axis. Okay, see that this is the slope line and this is falling. From left to right, falling down from left to right towards x-axis when your cost is reducing. And this is a very simple trick. Very simple trick to find out the and when your cost is increasing, gets your slope gets towards the y-axis. It's upward. But when your cost is reducing, your cost line of y-axis is falling down towards x-axis. Like that way, it is falling, just like in a sleeping mode. Okay, so see here, it is the retrospective discount units already purchased. So the graph, and it is a variable cost, and variable cost starts from origin Variable costs start from origin, so this is false. And this graph is not correct. The correct graph is D. How D? See that till here the cost was like this and the cost was reduced, and this is now the imaginary dotted line which is showing that the slope is getting reduced, because this dotted line is basically showing the retrospective effect. Retrospective effect. And here it is not showing the retrospective effect. Not retrospective. Retrospective means applying from uh, the unit number 1 as well. So the student who had given the answer option A, have you now understand this thing? Have you now understand this thing? And why not option C? Sure. The option C is that the graph is like that way and it is getting reduced. And this is showing prospective. Prospective means after the discounts will be applied after that range. But we are concerned with the retrospective effect. And this is the dotted and imaginary line to be shown like that way. Okay. So this is the dotted and imaginary line, which I'm going to teach that. Have you understand that? Have you understand that? Okay. That's good. That's good and appreciated. Now, I am moving towards the next MCQ number 9. Which of the following are the benefits of budgeting? Which of the following are the benefits of budgeting? Number 1, it helps to coordinate the activities of different departments. Number 2, yes, it's a coordination. It's a coordination among different departments. Why? Because budgets depends on each other. Number 2, it fulfills a legal reporting obligation. No. And when I eliminated number 2 option, that means C is eliminated and D is eliminated because it both includes 2. It's not a legal obligation that I will be preparing my budget. It's my management part that I may prepare my budget according to my desire, according to my targets. I should not consult with the regulatory or the legal requirement to prepare the budget. Number 3, it establishes a system of control. Yes, it is a cost control. Budget is a cost control technique. Budget is a cost control technique. Number 4, it is a starting point of the strategic planning. It is a starting point of a strategic planning. It's not necessary, we can say that. Uh, and yes, the strategic planning begins with the mission. The strategic planning begins with a mission, okay? The strategic planning begins with a mission. So 1 and 3 is the correct option, and you can find here it is in option B. You can find here it is in option B. I think I should write one thing for you for your relevancy. That first of all there is a mission set. First of all there is a mission set. Mission is what? The reason of existence. The reason of existence. Then you finalize your objectives. Objectives are split into 3 categories: strategic, tactical, and the operational objectives. Then you need CSF. CSF means critical success factor. Critical success factor are those things, are those factors which are needed to excel or outperform. For example, if I am running a restaurant, that means I need a good cook, a good chef, a clean environment, and these are the very basic and the fundamental factors. We can say these are the fundamental factors. Fundamental factors. If you are running an institute, then you need basic resources, fundamental. Number one, teacher. Number two, the classroom. Number three, the other facilities as well. So these are the resources which are needed. And then you will be using KPIs, key performance indicator, in order to measure the CSF. Okay, so these are the hierarchy of the basic organization, that is starting with the mission, then objective, then in order to achieve the objective you need critical success factor, and then the KPIs, the key performance indicator, which we had discussed in detail in yesterday's class. Okay, key performance indicator. And mission, I just explained at the starting of this class that mission is the reason of existence. You published mission statement and all that stuff. Okay, students, now we are proceeding for the next MCQ, number 10. The following statements relate to the participation of junior management in setting budget. Participation, that is bottom up approach. Which statements are true? Number one, it speeds up the setting of budget. No, because when many juniors are involved in participation, then it will take time. Obviously, it will take time when many people are there to present their ideas and discussion and all that stuff. It will take much time, and the statement written is wrong. The statement written is wrong. Number two, it increases the motivation of junior. Obviously, yes, because if you will be allowing someone to take part in the decision making in the budget setting process, then he or she will be motivated. That assume that you are a junior and your senior is calling you for your advice, for your suggestion. So it may be possible that you are motivated from inside. And yes, number two is the correct option. Number two is the correct option. Number three, it reduces the level of budget padding. What is budget padding? Budget padding is the budgetary slack. Budgetary slack. And we had discussed the budgetary slack. That is the inefficiency or manipulation in the budget. Inefficiency or the manipulation in the budget. If you will be allowing your junior, so it quite may be possible that they may add slack. Allowing junior may add slack. If you will be allowing to your junior, if you will be allowing your junior to take part in the budget setting process, if you will be allowing your junior to take part in the budget setting process, it quite may be possible. Allowing juniors they may give advice which are in their favor and may add slack. So it is saying that it reduces the level of slack. That is absolutely no. It increases the chances of slack. It increases the chances of slack. When you will be allowing the juniors in the participation process, it will be increasing the chances of slack. Okay, so which option is correct? The option 2 is correct. The option 2 is correct. Okay, the option 2 is correct. Have you people understand this thing, this explanation? Mr. Suleiman Shah, I just read your question and I had already explained option number 4 in the previous question. So I hope your concerns are clear. Excuse me, students, give me a response here. Give me a response here. Okay, all clear. Okay. Okay, students, that's very good. That's very good that you have understand this concept. Question number 10. Now, this is question number 11. This is question number 11, and the question is asking what is the company's return on investment. Return on investment means ROI. That is return on investment. And I'm giving you just 1 to 2 minutes to solve this question. Just drop your answer here in the question box. Your time starts now. Now we are solving this ROI, that is the return on investment. And how do you calculate? How do you calculate return on investment? That is profit before interest and tax upon capital. But we are not having. The company has a capital employed 200,000. It is a cost of capital, and its residual income is 36,000. So as I have told you earlier that whatever the format is given, just write it down. PBIT, I don't know, less imputed interest, that is capital, multiplied by cost of capital. 200,000 multiplied by 12%, that is 24,000. And my reported Residual income is $36,000. So that means I have to go back in order to calculate this thing. That is 60,000. And it just makes sense that when you will be deducting 60,000 minus 24, the resulting figure is 36,000, the residual income. Now you have got profit before interest and tax, and ROI is PBIT upon capital multiplied by 100. That is ROI is equal to 60,000 capital, profit, and the capital is 200,000 multiplied by 100. 60 upon 200, that is 30%. Option A. 30%. Okay. So this is your residual income calculation. Give me the answer of profit before interest and tax, and through profit before interest and tax, I had calculated the return on investment. Now moving to the next question, number 12. Question number 12. A company has calculated $10,000 adverse direct material variance. Adverse 10,000 variance. 10,000 direct material adverse variance by subtracting flex budget direct material cost from actual direct material cost for the period. Which of the following could have caused the variance? Which of the following could have caused the variance? Which of the following could have caused the variance? Cause means the reason of this adverse variance. The reason of this adverse variance. Just read all these four options. Number one, can it be the reason that direct material prices would have increased? Can it be possible that material price increase was the reason? Yes. Increase in the direct material prices. Number four is saying units sold greater than the budget. You don't have to, nothing to do with your units sold. And when you had deducted number four, that means option D is eliminated. This is a good MCQ technique. It's nothing to do with the sold. Units produced being greater than the budget. Units produced greater than the budget. No. Yes, number two. Yes, you people gave me the right answer. An increase in the raw material usage per unit. And obviously, there are two variances. Number one is price variance, and number two is the usage variance. So both are the reasons, one and two, and option C. That's very good. I'm impressed with your answers. Number 13. Number 13. A company has recorded the following variances for a period. What is the fixed budgeted profit for the period? See, you people might be remembering the format of the operating statement. How would you have produced the operating statement? That is budgeted profit. We don't know. Then you adjust sale volume variance. Then the figure is called standard profit on actual sales. Then the figure is called standard profit on actual sales. Standard profit on actual sales was 120,000, and there was a sale volume variance 10,000 adverse. So nothing to do with the further variances, just simply added up 120 plus 10,000. So it's 130,000. That is a budgeted profit. Option D. And we had solved our standard costing and variance analysis and the profitability statement, that is operating statement, in the third day of this webinar series. So this is simply the followance of the format of the operating statement. I'm writing here operating statement thing. Okay. So you should be memorizing, you should be remembering the format of the operating statement. Moving to the next, number 14. Which of the following are suitable measures? Measure means KPIs of performance at the strategic level. At the strategic level. See that there are three levels. Number one is strategic. Number two is tactical or middle. Number three is the operational. Operational means day to day. Operational means day to day. Or I should use the diagram, which is a more simple technique to memorize. Like that way, there's a strategic level, that's board of directors. That's a tactical level, that means managers. And there is operational level, that is day-to-day workers. So strategic level, yes, because strategic level like board of directors are concerned with the broader aspects. And board of directors would not be interesting in the number of complaints. That is a matter to deal with the tactical level. Yes, market share and the return on investment are the broader pictures. These are the big picture of the organization. Big picture of the organization. Because dealing with the complaints is the responsibility of the managers. It is not the responsibility of the board of directors. So number one and number two is the correct option. Number one and number two, A is the correct option. A is the correct option, number one and number two. Okay, that's very good. Okay, students. Okay, students, there is a topic of correlation coefficient, coefficient of correlation. Now, there is not a calculation and the format here of the coefficient of correlation, but as part of the theoretical discussion, I can explain it. As part of our theoretical discussion, I can explain it. Coefficient of correlation is basically showing by R. Now, there are two variables. There are two variables, X and Y. X and Y. Like you can say, X is your summer season and Y is your ice cream sales. Now see, there is a relation. There is a relation between these two variables. This is the independent. This is the independent, and this depends on X. If your X will increase, your Y will increase. This is known as positive correlation. There are three kinds of relationship. There are three kinds of relationship. One is the positive and one is the negative. And number three is the no correlation. For example, if your summer season would increase, your sale would increase, a positive correlation. If X is increasing and Y is decreasing, for example, this is the negative correlation. And if X and Y, this is no correlation. It quite may be possible. For example, any season and the production of apple and bananas, because it comes in every season. And remember, one thing is that the relationship is either positive, negative, or no. So there is a scale of measurement of the relationship. There is a scale of relationship of the relation, that is 0, +1, and -1. The relationship should be fall in this range, not above or below this range. Otherwise, there is a mistake. So my relationship can be 0, can be -0.94 till -1, not less than that. So these two are not applicable. These are the feasible values, 3 and 4. Option B. It cannot be more than this, more or less than this particular scale. It cannot be more or less than on this particular scale. Next, a company's operating costs are 60% variable and 40% fixed. 60% variable and 40% fixed. The company's operating cost is 60%. Hello students, am I audible here? Can you people answer me in the question box? I guess there was a technical glitch here. Students, my voice and screen is all clear. Okay, that's fine. Okay. Okay, students. Okay. I guess there was a technical disturbance, and now it is sorted out. No problem at all. I guess it was from my side when I solved it. Okay, students. Now, question number 16. A company's operating cost is 60% variable and 40% fixed. Which of the following variances values would change if the company switched from standard marginal costing to the standard absorption costing? Which values will change if companies switch from standard marginal costing to standard absorption costing? The answer is material price variance will remain same, variable overhead remains same, fixed overhead expenditure will remain same. The only thing which will change is option C, and that is why option C. I'm also explaining this. This is a sale volume variance. Sale volume variance. Why? In the sale volume variance, there are different. Remember, it's sale volume profit variance and sale volume contribution variance. So definitely these values will change, and rest of the other values would remain same because nothing have to be changed on those values. Okay. So this is my option C. This is my option C. Okay. Now moving to the next question, number 17. What is question number 17 is saying to me that what is the budgeted total production cost if it operates at 85% of the capacity? If it will be operating at 85% of the capacity, 85% of capacity. See, I'm having two capacities and total production cost. It is giving me the hint of high-low method. High-low method. Now, in high-low method, you take variable cost per unit, and you take the difference of 120 minus 280. That's the cost divided by 160, and that is variable cost per percentage. 15120 minus 11280 divided by 100 minus 60, that is $96 per percentage. And then you need to calculate the total fixed cost. And there's a very simple trick to calculate the fixed cost, is that total cost is equal to fixed cost plus variable cost multiplied by activity. Select any of the activity, as I do always select the lowest one. You can select the highest one as well. No problem at all. You will be receiving exactly the same answer. So the total cost is 11280 is equal to fixed cost is unknown to me. Variable cost is 90 multiplied by 60. 96 multiplied by 60. So you can calculate the fixed cost through the reverse calculation. That is 96 multiplied by 60. 11280 minus this figure. The fixed cost is 5520. Now you have got this and you have got this. Now you can calculate. Total cost at 85% capacity. That is total cost is equal to fixed cost plus variable cost multiplied by capacity. Total cost is unknown. Fixed cost is 5520 plus variable cost 96 multiplied by 85. And that you can calculate your total cost. That is 13680. That is option A. 13680. That is option A. If I'm sharing, that means there is a window to copy. There is a time window to copy this. Okay, students. Now I am moving towards the next MCQ, and that is number 8. Oh, sorry, number 18. That is number 18. The question is saying calculate IRR. Calculate IRR. That is internal rate of return of the project. And you should remember that formula IRR. If any one of you was not present on day 2, so must watch the recording of day 2. I had covered the entire chapter of project appraisal, the complete chapter of the project appraisal. Okay, I had covered the complete chapter of the project appraisal. IRR is calculated as this formula. Using 10% interest rate, the NPV was 50. If the interest rate is increased by 1%, the NPV falls by 20. The NPV falls by 20. Question number 18. Can you people just calculate this IRR? Can you people calculate this IRR and give me the answer? Okay. I told you that do not run for the positive and the negative answer. See, at 10%, your NPV is 50. And it is saying that if interest rate is increased by 1%, that means 11%. Your NPV will fall by 20%. That means it will be at 30 plus 30. Now both are 30. Sorry, both are positive. I just told you that go for the higher and the lower one. This is A family and this is my B family. Higher and lower one. Do not go for the positive and the negative values. So IRR is equal to small a is 10, capital A is 50, sorry, capital A is 50 divided by 50 minus 30 multiplied by 11 minus 10. Now you can simply calculate IRR and that is 12.5 percentage. See, at 12.5%, the NPV is 0. This is internal rate of return. And you cannot deny that they had covered it in the day 2 of this webinar series. Yes, that's good. Fiona Krish, Saad Ahmad. Okay, moving towards MCQ number 19. MCQ number 19 is the reapportionment of the service industry, of the service cost center, sorry. So, first of all, I should give you a short recap of absorption. It is number 1, allocation, number 2, apportion, and number 3 is reapportion. Reapportion includes sharing of overheads of service center to the production centers. Okay. So what's here? P and Q are the production centers and XY are the service centers. XY are the service centers and PQ are the production centers. Now the question is saying that after the reapportionment of the service cost center has been carried out, what is the total overhead for production center P? See that P includes percentage cost center X to 50% and Y to 30%. And this is specifically the 50,000. That means production center P includes its own allocated amount. Number 1, 95,000 plus 50% of X and 30% of Y. Y is 30,000. Y is 30,000. So that means 30,000, 30%. Y is 30,000, 30%. 3 is 30,000, 30%. That means 9,000. But X is not 46,000. See that X includes 46,000 plus 10% of Y. What is X? X is 46,000 plus 10% of Y. So that means X would be 46,000 plus 10% of Y and Y is 30,000. So that means X is total 49,000. So here I will be having the calculation like that way. X is 49,000. Okay, remember its own calculated amount. The own calculated amount of production cost center P is 95,000 plus 50% of X, that is 49,000 multiplied by 50%, that is 24,500, and then Y 30,000, 30%, that is 9,000. Make it total of production cost center P. 95,000 plus 24,500 plus 9,000. That is 128,500. Option D. That is the reapportionment. That is the reapportionment of the reapportionment basically means the sharing of the service center cost to the production cost center. Yes, very good, Mr. Sadamat. Just 20 seconds, just 20 seconds, and I will be proceeding for the next question. Okay, now the next question is question number 20. Question number 20. EOQ. Now, what is EOQ? What is economic order quantity? EOQ means economic order quantity. EOQ, economic order quantity. Now, before going to answer this question, I think I should explain the concept of economic order quantity. Economic order quantity. Now, listen that what is EOQ? EOQ, economic order quantity. See that when your stock falls at reorder level, when your stock falls at reorder level, you order new units, and that new units quantity should be EOQ. EOQ means economic order quantity. Now, what do you mean by the term economic order quantity? I'm now going to explain it in the next slide. Hurry up, do copy this. Okay, now what is EOQ, economic order quantity? See, when we will order goods, there is ordering cost. There is ordering cost. Ordering cost like contacting to supplier, like your transport charge, like your any documentation charges. This is an ordering cost. And when the goods received, there will be holding cost. Okay. So at EOQ, what is the speciality? That ordering cost and holding cost is same, and their combination is low, and their combination is low, and their combination is low. Now I should explain this in a graphical manner. Just hurry up, just do copy this or take the screenshots. Okay, now see that, assume that when your order quantity, assume that your order quantity, I'm making two cases, case number 1 and case number 2. For example, your order quantity is 200 units, and case number 2, your order quantity is 500 units, and your collective demand is 1000 units. The collective demand is 1000 units. Okay, so if this would be the case number one, that means one order is equal to 200 units and one order is equal to 500 units. Here you will be placing 1000 divided by 200, that means 5 orders, and here 1000 divided by 500, that means only 2 orders. So that means what? When your ordering quantity increases, your number of orders reduced, your number of orders reduced, and so ordering cost will be reduced, and so your ordering cost will be reduced. Agreed on that? You have to place 5 orders here, and you have to place just 2 orders here. So your number, when your order quantity increases, so what I am going to draw the graph. These are units and these are cost, and I am writing a caption here. When ordering units increased, that means ordering cost reduced, like that way. This is the ordering cost. And see that if you will ordering more units, naturally your holding cost will increase. Why? Because you were asking for 200 units previously, and now you are arranging 500 units. So definitely more units, more holding cost. More units, more holding cost. So the graph would be like that way. And this point is the economic order quantity. Remember these statements. When your ordering units will increase, it will increase your holding cost. Definitely your units are increasing, and so the holding cost. And when ordering units are increased, the number of orders are reduced, so that means your ordering cost will be reduced. So a company always determines its order quantity for the raw material by using the economic order quantity. What would be the effect and the total annual cost of a decrease in the cost of ordering a batch of raw material? Decrease in the cost of ordering. Decrease. See, when you are decreasing the cost of ordering batch of raw material, decrease, you are decreasing. That means your annual holding cost will be lower, and your EOQ will also be lower, because EOQ, it's a formula to calculate like that way. If you will be decreasing the cost of the order, if this figure C naught stands for ordering cost. If CO will decrease, your EOQ will decrease, because it is a numerator figure, and then the resulting figure will also be lower. Okay, now question number 21. Question number 21 um, is about the total value of 2000 units transferred to the finished goods warehouse the last month. Um, Students, since today is the last day of this webinar, so I prefer that we will not be taking any break and we will continue to solve this today's agenda. Okay. Question number 21. A company which operates a costing system and work in progress. Yes, it's a work in progress. At the start of the last month, 300 units. This amount, which was 60% complete. That means 2000 units are finished goods. Obviously, it includes 300 units as well and 1700 units as well in this period. It was from the last period. It was 60% complete, 60% complete at 1710. 60% complete at 1710. 360% becomes 180 units and 40%, 300 multiplied by 40%, that becomes 120 units, and it will be valued at $10, which is the cost arising of the last one, $10. So what will be the total amount? Total amount would be that from opening stock there is 180 units and 120 equals 300. 180 is valued at $1710 and 120 will be completed in this period at $10. So it would be 1200 and the remaining 1700 current 1700, because 200 units are the finished goods. 1700 multiplied by $10, that will be 17,000. The total value you can calculate. That's 19910. Is the total value transferred to the finished goods. Because 300 units were previously completed at 60% at 1710. So naturally the 40% amount will be completed in this process, whose value is $10. Whose value is $10. Okay, is it now fine? 60%, 1710. The amount is already given because the company uses the FIFO method. 120, 1710, and the remaining 40% will be valued at $10 because it will be completed in this particular period. And from 2000 units, 1700 units, obviously this is the current process cost. So we added all the costs. Okay, I've repeated this. Now, number 22. 22 is about the fixed production overhead capacity variance. Fixed overhead capacity variance. When the capacity shows number of hours. Capacity shows number of hours. And remember that it is favorable to work more hours in the same fixed cost. In the same fixed cost. A manufacturing company operates a standard absorption costing system. Last month, 2500 unit production hours were budgeted. Okay. You budgeted 25,000 hours. And the budgeted fixed production cost was, okay, not interested right now. Last month, actual hours 24,000. Actual hours was 24,000 hours. And we need now a rate per hour. Fixed overhead absorption rate per hour. That is 125,000 divided by 25,000. 125,000 divided by 25,000. That is $5 per hour. Obviously, it is less. It's more. It is actual. It's budget. So that is 5,000 adverts. That is $5,000 adverts. $23. The following statement is made about variance analysis. Sorry, value analysis. Value analysis means creating the value in the organization, in the product or the services. Which of the following statements are true? Number one, it seeks low cost method of achieving a desired function. Yes, value means your cost should be low. If your cost is low, that means your profit is high, and that is a valuable product for me. Number two, it always results in inferior products. It is nothing to do with the inferior or the superior products. It is saying that value analysis means whatever the value you are creating or whatever the product you are selling, it should be at low cost in order to make more money and the more profits. So that means it's nothing to do with the inferior or the superiority of the products. Number three, it ignores esteem value. False. It does consider the esteem value. A is the only correct option. And what is esteem value? What is esteem value? The prestige. You can say esteem value is the value in the eyes of the customer. Value in the eyes of the customer. And obviously, I should consider the value from the perspective of my customer, because they are giving me the money, so I should consider them. Number 24. Under which of the following labor remuneration method will the direct labor will always be a variable cost? Day rate? No. Sometimes fixed per day. Piece rate? Yes. Why piece rate? Because piece rate is on the basis of number of units produced. Differential piece rate, as its name implies, it's a different rate. Always be a variable cost. And group bonus is depend on the group efforts. Always variable is piece rate only. It will always be the case. It will always be the case. Number 25. Number 25. Remember one thing. I'm writing for question number 25 as well. Remember one thing. If closing stock increases, profit from absorption increases. Okay. And marginal profit decreases. Remember this thing. If closing stock increases, then profit from absorption increase and marginal decrease. If closing stock increases, and how do you interpret closing stock increases? For example, the production is 1,000 units and I sold 700. That means 300 is in a closing stock. 300 is in closing. That means production, because opening was nothing. Production is greater than sales. That means closing stock increase. When your production is greater than sales, that means closing stock will increase. When your production exceeds your sales, that means closing stock increases. Now, in month 1, the opening inventory was 400. I am writing here month 1. Month 1. Opening was 400. I did produce 3900. That means 3900 plus 400, and you sold 3800. Then what is closing? 500. Now 500 will be the opening for next month, and you produce 4200 and you sold 4400. Now what's closing? 300. Remember that what happened in month number 1? What happened in month number 1? Month 1, your production was 3900 and your sales was 3800. That means production was greater than sales. Production was 3900 and sale was 3800. So what would be the answer here? Your absorption profit is high and marginal profit is low. Absorption profit is high and marginal profit is low. And in month 2, see, in month 2, your production was 4200 and your sale was 4400. Your production was 4200 is less than sales. Sale was 4400. The resulting figure will be reverse. Absorption profit will be low and marginal will be high. And you should be able to match these things in the given options. Focus on month 1 and month 2. Month 2 there will be, and I guess it is matching with option number C. Month 1, absorption profit is high and marginal profit is low. Month 2, absorption profit is low and marginal profit is high. Remember this thing, that's all. You will be able to at least solve the MCQs just like that way. Now, number 26. The following statements relate to the advantages that linear regression analysis has over high-low method in the analysis of the cost behavior. See, there is high-low method and there is linear regression. High-low method and linear regression. We are here to discuss about the advantages of linear regression. Linear regression was, if you remember, like y is equal to a plus bx, and there is a different formula to calculate a and b. A and b. In high-low method, only two variables are considered. Only two activities are considered. That is high and low. In the linear regression analysis, all the data is considered. This is a primary advantage. It takes into account the all of the data. It's yes. Number three, it assumes linear cost behavior. No. Linear cost behavior, no. The cost behavior would change. The reliability of the analysis can be statistically tested. Yes. 1 and 2. Because it is the reliable. Why reliable? Because of this. If considered all the past data, then it's reliable. Then it's reliable more. If you are taking into account all the data, that means your calculated tested was more reliable. Number 27. Okay, what's number 27 is that there is a work in progress. Opening work in progress, no. A company operates a process in which no losses are occurred. The process account for the last one when there was a thing. Okay. Finished output 10,000. Closing work in progress. Now understand the word work in progress. It means, what does it mean? It means your work is not 100% done. If it is showing 4,000, if it is showing 4,000, that means showing 4,000 means that work is on 4,000, which means it's not 100% complete, not 100% done. But remember one thing, they are valued at same prices, at the same amount. If I can say that 480,000 divided by 10,000, if I can say that 480,000 divided by 10,000, that means the output has a value. That means output has a value of $48 per unit. Okay, and this will be valued at same value. That means 144,000 divided by 48. That means 3,000 units completed so far. That means 3,000 units completed so far. And if I can say that work in progress of 4,000 means work is on 4,000 and it's not 100%. To date, 3,000 units had done. That means 3,000 upon 4,000 multiplied by 100. That means 75%. 75% work. It is the work to date. How did I trace that 3,000 value? The 3,000 values were calculated from the cost per unit, The 3,000 values was calculated through cost per unit. Now, MCQ number 28. MCQ number 28. Which of the following would not be expected to appear in organization mission statement? It appears. Products or services, yes, it appears. Major stakeholder concern appears because mission statement is for the stakeholders. This is not appeared. This is a short-term targets. So this is not appeared in the mission statement. Number 29. If an employee produces 200 units in 8 hours on a particular day, what is the employee's gross pay for that day? An organization operates a piecework system. Piecework system means rate depends on units, but also guarantees its employees 80% of the time based rate of pay, which is based on 20 per hour for an 8 hours working day. What does it mean? 160 amount is confirmed. Three minutes is the standard time allowed per unit. Piecework is paid at a rate of 18 per standard hour. 18 per standard hour. The employee produced 200 units in 8 hours. What is the employee's gross pay for that particular day? Just pick up your calculator and calculate it. What is the minimum guaranteed wage? And what is the total amount here? Okay, 3 minutes is the standard time. That's 3 upon 60. That means 0.05 hours per unit. 0.05 hours per unit. That was the standard time. And the standard rate of pay is 18 per standard hour. Zero point zero 0.05 hours per day per unit, and you did produce 200 units, and your hourly rate is $18. So that will give you the collective answer. That is $180. 180 will be paid to him. Great, Mr. Saad Ahmed. Question number 30. By how much was the total overhead under or over absorbed for the period? Now, allow me to explain under and over absorbed. See, first of all, your overheads are absorbed. Your overheads are absorbed. And overhead absorbed are calculated as a rate multiplied by actual units. Rate multiplied by actual units. Your rate is 3.5 per machine hour. I should not write the units. I should write actual activity. So your rate is 3.5. Your actual activity is actual total overheads and 30,000 machine hours. So that means 3.5 multiplied by 30,000, that is 105,000. This was the overheads which was absorbed. Absorbed means charged at start of period. At start of period, I assume 105,000 as my overheads. But when I saw the actual overheads, it was 108,875. That means what? I had undercharged. I had already undercharged because the overhead absorbed, which I was assuming that overhead cost would be at the starting of the period, it was 105. That means already charged. I written in COGS, already charged in COGS. And later on, I came to know that actual overheads was 108. So that means I had undercharged, undercharged by 3875. And that means option A. Number 31. Which of the following statements relating to the management information are true? Management information, management information. Number one, question number 31. Number one, it is produced for parties external to the organization. No, it's for the internal parties. Number two, there is usually a legal requirement. No, not at all. Number three, no strict rules govern the way in which information is presented. True. True or false? Yes, true. There is no strict rules because management information, MI, management information depends on need, and there is no strict rules. Number four, it may be presented in monetary and non-monetary. Yes, it's financial and non-financial. 3 and 4. Option B is the correct answer. Number 32. Number 32 is that in a pie chart. You know what is a pie chart? Pie chart is just like this thing, and this is total 360-degree. It's total 360-degree pie chart. Market one, there are three different markets: 100,000, 149, and 51,000. If I can draw like that way, your 360-degree is split into approximately this. You can say this is 149. You can say this is 100, and this is 51. You can assume that, and the total is 300,000. So this is total 360-degree. So in a pie chart representing the portion of the sale made by the each region, what would be the angle of the section representing market 3? Market 3 is 51,000. So you need to weightage 51,000 divided by 300,000. 51,000 divided by 300,000 multiplied by 100. That is 51 divided by 300. That is 17%. Okay, and the total area is 360-degree. Total area is 360-degree. So if you want to find out this thing, this represents 17%. 17% of the total 360-degree. So it's 17% of total. Market 3 is 17% of total 360 degrees. So 360 multiplied by 17%, that is 61.2, and that is this option C, 61 degree. This is 61 degree. Okay, so this is the way to find out the degrees in the pie chart. Next, question number 33. Question number 33. Which of the following best describe a flexible budget? Best describe a flexible budget. Yes, option C, a budget which shows sales and revenue costs at different levels of activity. That's all. It's very simple. At different level of activity, we had covered. Question number 34. The purchase price of an item of inventory was 25 per unit. What is EOQ? EOQ, it's a formula to C naught D upon CH. In each 3 months, the usage of the item is 20,000 units. That means D for demand. Demand is 20,000 units. The annual holding cost is 6% of the purchase price. CH is holding cost. 6% of purchase price. That is 6% of placing an of a purchase price 25. 6 multiplied by 25. That is 1.5. C naught is ordering cost. That's 20. Place all the figures. EOQ is equal to 2 multiplied by 20 multiplied by multiplied by demand. Demand should be annual. This is 20,000 for every 3 months. For every 3 months. That means a quarter. So 20,000 multiplied by 4 will give you the annual demand of 80,000, because we need to focus on the annual thing. It is written annual. This is a demand every 3 months. So demand would be 80,000 divided by holding cost, that's 1.5. So just calculate economic order quantity. The answer is 1461. We should take the demand annual because it is everywhere it is using the word annual. And I've given the concept of the economic order quantity. Number 35. Using a physical unit method for apportioning joint cost production cost, what was the cost value of closing inventory of HH for the last period? Closing inventory for HH for the last period. Just read out the question, hurry up students. Total joint cost. Now what is the joint cost? When there is a process 1, process 2, and your joint and byproducts are separated. Now this is a split of point where there is a joint cost. That is the cost of separation. Cost of separation. And it's 350,000. And products are G and H. 350,000. And how many units you did produce, because they're asking for the physical unit method, and the production was a physical unit method. We count total produced units, that is 420,000 of G and 330,000 of HH. So the totaling 420 plus 330, that's giving me 75,000, 750,000. 750,000, okay. And the joint cost is 350,000. We have been asked for product HH. So 350,000 divided by 750,000 units multiplied by for HH, it's 330,000. So the product HH will be having a share that is 154,000. 154,000 is the share of cost for HH. Share of cost for HH. And you did produce 330 units, and there is a closing of 330. And it is asking for the value of closing stock. It's 330 units. For this is the share of HH cost. Share of HH cost, that is $154,000, and in HH there are 330 units, and there's a closing of 330,000 units. Produce 330,000 units and closing 30,000 units. So the cost of closing like that way, 154,000 divided by 330,000 multiplied by 30,000. What is the amount? It's 14,000. Okay. Now there is one thing more. There's a further processing cost for product H. Further processing cost. This is 66,000. This was the share of joint cost, 14,000. Share of joint cost, 14,000. Now we need a share of further processing cost. Further processing of product HH, that is 60,000 divided by 330 multiplied by 30,000. So it is 60,000 divided by 330 multiplied by 30,000. That is $5454.54. If you can total this amount, is somewhere somewhere 19,000 something. So make it a round of C, 20,000. Okay, it was 66,000. Sorry, it was 66,000. It was 66,000. 66,000. It was exactly 6,000. So make it it's 20,000 the exact answer. Yes, Mr. Saad Ahmed, I was about to add it because I wanted to show it separately. Is it now clear, all of you? Students, just give me the response. How was today's class? How was today's class? Just give me the response. How was today's class? How it was? Was it productive? Because I had covered many of the areas. Was it productive? Just give me the honest review. All of you, please give me the honest review here. All of you, all of you. Okay, that's good. Now, there are just three questions left. There are just three questions left, and you should try it by yourself. This was the statistical analysis. And one thing more, I would like to display the ACCA website from where you can find out the additional resources and what are the resources available to you. You should know that there are many things in your accaglobal.com, and here is the accaglobal.com homepage. I'm going to display. When you will be opening that website of ACCA, so you should go down. First of all, you should go down, go to the past exam papers, go to the past exam papers, click on the ACCA qualification, click on your concern paper, that is management accounting, and here are the resources. See, this is the introduction to management accounting, examining to the guidance, syllabus, maths, English, language support, practice tests. Yes, practice tests. This is the practice test, and this you need to purchase it from your from the ACCA. This is the additional purchasing practice test. But here, if you will go for the specimen exam, you will be having a window like that. Specimen exam and MTQs. Click on this thing and see that BT, paper MA, full exam plus management accounting, extra MTQs. When you will be clicking on that thing, the next window will be opening, and here you can go for the full exam. This was the full exam. When you will be clicking, then it will be asking move to the next, and then start your exam. This is the benchmarking. Yes, our first question. Accounts receivable is a functional benchmarking. The answer is right. If you click competitive benchmarking, it will give you the wrong answer. See above. Functional benchmarking, right? And click on the next. Best target costing. For example, I am doing the wrong answer. It will give you the wrong answer. It is the right answer, which we have done. Yeah, next. Then again, you have to calculate it. And this is the extra MCQ. You have to go next, start your exam, and this is extra MTQ. So must use the resources of accaglobal.com, which are available, and it is for your concern, for your benefit. Okay, so thank you so much for your valued feedback and your honest feedback, and I really wish you people good luck for your exams. And the webinar has been ended, and I did try my level best to cover maximum portion of the syllabus. Okay, students, was the session helpful? Again, you people can contact me. You're most welcome, Fiona Trish. You people can contact me at this my WhatsApp number, and the WhatsApp group had been created for your continuing support. Okay, till here, I really wish you people good luck for your exams. Okay, thank you so much. Um, Productive 15 hours. Thank you so much. Thank you so much, all of you. Thank you so much. Remember us in your prayers. Wish you good luck for the exams. Bye bye. Take care.